Good day, awesome viewers. A very happy new year to all of you. Let's start by looking a quick look back at 2018 and what a year it has been. Going back to the same time last year, the forecast was for 2017 to continue into 2018, albeit at a much slower pace. Now that part of the forecast did hold up. What has surprised everybody is what the associated volatility that the slowdown in growth has brought along with it. So let's start by looking at the returns of major asset classes, starting with the stock indices. Now, if you look at this chart, all major stock indices were down in 2018. To name a few, S&P 500 down 6%, TSX, the Canadian index, down 12%, and the Chinese index down about 20%. Moving on to the other asset classes, we'll see that there was red all around. And 2018 was in fact a worse year than 2008, whereas in 2008 we had stocks and bonds holding up portfolio values. We didn't have any of that cushion into 2018. In fact, in 2018, the only asset class that provided a positive return was US Treasuries. That's basically cash. Now, having said that, now looking forward into 2019, the major forward-looking indicators still do not indicate a strong possibility of a recession. The real interest rates are low, job creation has been strong, the yield curve is still positively sloped. The one thing that I've been watching is the spreads on the high yields in the US. Now they have been creeping higher, and if they continue to do so, they could indicate trouble ahead. Now, till that time that happens, this crisis might present an opportunity. And the reason I say that is that the PE multiple has shrunk significantly in 2018. Now, if you look at TSX, it's trading at about 12.4 times its forward earnings. Now, that could be to do with the headwinds that are faced with the Canadian economy, but in US, S&P 500 is at about 14.4 times forward earnings. And that's the lowest it's been in about 5 or 6 years. And if job creation holds up, interest rates still low, and the earnings hold up as well, I think I might be going out on a limb here, but 2019 could turn out to be a good year for S&P 500. Coming back to a practice front, I'll be resuming the workshop series, Women in Investing. Starting the first one will be on Jan 24th, 6:30 p.m. The second update I have is I have a new website, askaman.ca, going live end of this week. And I do want to conclude with this, by saying that what kind of New Year update wouldn't mention resolutions, and if you made any resolutions for yourself. I've made a resolution for myself to be sugar-free for the first 30 days of the year. And I'm going to report on how I did on my resolution when I come back with my February update. So if you haven't made yours, it's still time. And you have a wonderful January, an awesome 2019. I'll see you back in the first week of February. Thank you so much.